to all. Myself Vaibhav. In today's session of Market Movers, we are going to dedicate a lot of time to the euro, and of course, euro is flying high after the ECB's announcement of increasing the pandemic emergency purchase program by euro 600 billions, and now cumulative total stands at euro 1,350 billions, so it is 1.35 trillion euros worth of these assets are going to be purchased till June 2021, or at least till the ECB feels it is needed to support the economy through these troubled times. If we consider the interest rates, no tinkering was made there as expected. The ECB left interest rates unchanged at 0% while leaving the deposit facility rate at minus 0.5%, and marginal lending rate stands at 0.25%, so there is no change on that front. And even the ECB president Ms. Lagarde has emphasized that ECB is doing whatever it needs to be done to get the growth back, and since there are no concerns surrounding the inflation and the demand is likely to remain subdued at least for foreseeable future, that gives ECB more headroom to keep the interest rates lower while extending the asset purchase program. At the same time, it doesn't have to worry about the inflation shooting up. So I think this is a good mix, and it is likely to support the eurozone's economy in coming months, coming quarters, and that's why we are seeing euro flying higher. If the eurozone's economy recovers, then that's a good sign for the euro strength, and that's what we are happening. That's what we are seeing is happening in today's session. Moving on to the North American trading session, we got these initial jobless claims for the week ended May 30th, and in line with the trajectory this time around, the initial jobless claims are lower compared to the prior week, but still substantial. And these jobless claims addition of 1.8 million is still high compared to the pre-coronavirus days, but at least the trajectory is on the downside, and we will see the initial jobless claims moving further lower as more and more parts of US economy opens up after the relaxations of the lockdown because of the coronavirus crisis. But US is also amidst another crisis, and that is the protest because of police high-handedness while dealing with Mr. George Floyd, and that has brought US citizens on the streets, and because of that, some concerns are there regarding the virus spread as well. But we will have to wait and see how this situation pans out in coming weeks. Now, moving on to the technical outlook, we will cover the Euro USD, and then we will consider the gold. Gold has been constant for last couple of sessions, and today we are further devoting some time to the prospects of the gold in coming days. Let's consider the Euro USD's technical outlook first. This is the daily time frame chart, and looking at this, I feel there is a strong possibility of Euro USD getting back closer to 1.15 zone. In today's session, we saw Euro USD backing off after touching close to 1.127, but the underlying momentum is on the bullish side, and I'm not seeing any reason for Euro USD to stop this upward rise just yet. We are pretty much on the bullish run. This is the second leg of this bull run, and I think for next couple of sessions at least, Euro USD is likely to remain on the strong footing. So it's better for us to adopt a buy on dip strategy. We have talked about the possibility of euro moving higher even when it was consolidating closer to 1.08, and even when it was just hovering close to 1.09, we had talked about the possibility of euro getting to 1.11. Now those targets have been revised higher, and I think 1.13 is not far off. And maybe after that we might see some minor corrective phase, but eventually it is likely to try to get back closer to these prior swing high, which is there around 1.15, and after this extended consolidation, where it didn't really break below these prior swing low. So I think that makes the possibility of Euro USD testing this prior swing high pretty high. So let's see how things evolve. From our short to medium term perspective, the things are of course on the bullish side, and unless and until we see a clear breakdown below this today's swing low established closer to 1.119, I don't see any reason to look for short selling opportunities. Maybe if we get any good opening, good point to get involved on the long side, anywhere close to 1.122 to 1.123 would be an excellent deal in today's scenario. And on the higher side, we can expect further retest of 1.127 or even beyond that, and our immediate target can work out close to 1.13, which can be kept in mind as the immediate target. And I think if the Euro USD is able to sustain above the first resistance of the pivot point series for this month, then that will strengthen the case for the Euro USD to continue its march higher. So we can even watch out for today's close, or even before that we can get involved if we get some entry points anywhere close to 1.122 as I said. So that should be a good enough opportunity for us to get involved, and stop loss can come closer to 1.119. That's the stop loss of around 30 to 35 pips, and of course it is bit wide, but then today is no normal day. We are trading after the ECB's decision, so the volatility is of course likely to remain high. And moving on to the hourly chart, the picture remains pretty much the same, and here the immediate zone which might indicate the reversal of fortune for the Euro USD is going to be this 100 SMA. So unless and until there is a clear break, and then the price momentum should sustain below this 100 SMA level, only then we will be able to say that the upward momentum has waned. Till then, the target, the trade which is likely to keep us in profit, is on the long side, and as has been proven for last 2 weeks now, even for next couple of sessions I feel that the momentum is clearly on the bullish side. So unless and until there is a break below this crucial SMA support, I am not kind of advising any trade on the short sell side. So we will have to be cautious while adopting any trading strategy in the euro. Now moving on to the gold. Gold has actually broken down, and we even saw yesterday's break below 1700 zone. So that is psychology speaking a crucial price zone, and that had given way. But after ECB's monetary policy announcement, we are seeing strong volatile momentum, and it has been jumping on both sides. So we have to see what are the levels which will act as a clear marker for us whether to go long or whether to go short. Of course, my personal bias still remains bearish. Even in yesterday's session, we had talked about the gold possibility of gold moving lower, and that did happen. But I am not really sure if you were able to profit from that move or not, as it was pretty sharp. But in today's session, we can take our chances while underlying some critical levels which we need to watch out for. Here, as I was talking about in yesterday's session as well, after this long consolidation, the formation is turning bit bearish for the gold, and even if you consider this formation of this low being lower than the prior swing low, and this high being lower than prior swing high, so we have a formation of lower lows and lower highs in taking place now, and that is likely to turn the immediate trajectory on the bearish side. The momentum is likely to shift to sideways to bearish at least for the next couple of weeks, and we can expect some corrective momentum uh, to set in the gold, and the possibility of gold moving lower toward this 38.2% Fibonacci retracement can't be ruled out. If that is going to happen, then of course our tools are going to heavily depend on these short-term technical points which are going to guide us in figuring out the entry and exit point. So here this price action has now entered into a bearish phase, and as long as the price remains below this central pivot point which is there around 1722, I would suggest that it would be beneficial for us to adopt a short sale opportunity, and any short sale opportunity anywhere close to 1720 should lapped up. We are indeed getting this opportunity in today's session, as we are again seeing that gold is starting to climb higher after this topsy-turvy price move, and if say in couple of hours if we get the opportunity to go short anywhere close to this central pivot point of this month pivot point series, then I think that would be an excellent opportunity for us to minimize our risk while trying to maximize our profit. Coming to the hourly chart, we have this confluence of 200 and 100 SMA coming into play around these levels of 1720 to 1725. The 100 SMA is on the higher side, and I think any short selling opportunity in between this price band of gold between 1750, where we have 50 SMA, and then on the higher side the 1725. So this is the price band which we should keep in mind for fresh opportunities to go short, while keeping the stop losses anywhere close to 1735. That should be good enough. If the price is able to climb back above this 100 SMA and also above immediate swing high, then we can consider it as a possible sign of reversal happening. So this stop loss of 1735 should be good enough, and if we are going to get involved for the short sale trade anywhere close to 1720 to 1725, our stop loss is not exactly too wide. It is just little below 1 percentage point. So for a risk of around 1 percentage point, we can expect around 2 percentage point move on the lower side, and if things work out well, we will of course see a fresh swing low being formed below this 1790 zone. And as I had said even in yesterday's session, the possibility of gold moving towards 1650 is also there. So from that perspective as well, we can look at this trading possibility, the opportunity. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. See you tomorrow. Goodbye.